Recently, we purchased our first home together. I'm so excited. And I got a lot of friends messaging me about they're thinking about purchasing a home themselves as well. And I've seen online that millennials are not buying houses. So in today's video, I want to talk about some of the costs that come with a house. Is purchasing a home really an investment or a big liability? In today's video, I want to share some of my experience and some of the things I learned through purchasing a home, and maybe my experience can help you making a decision. Hello my friend, welcome back to my channel. This is Miss Ming. On my channel, I do a variety of lifestyle videos. So before we start, make sure you subscribe and ring the notification bell. Make sure it's personalized. And let's get into the video. Purchasing a house is considered a real estate investment. Really? Is it really investment or liability? So first, let's look at what is an investment and what is a liability. Investment refers to the things you invest on that returns money in the long run. So you could be investing your money or investing your time or a combination of both. So when we're looking at investment, usually it comes with risk, of course, but you usually pay things up front and hoping for things in return later. Versus liability is things that cost your money, not necessarily having return. So some examples of investment and liability would be investing in the stock market. Of course, it's risky, but if the stock market goes up and your money becomes more and more, liability would be your car. Your car is definitely not investment unless you use your car to make money. For example, if you purchase a car and then you drive a Uber or you drive Lyft using your car or delivering a pizza, then your car becomes your investment because you pay for money and you get monetary return with using your car. However, if you're just buying a car to go to a grocery store, you could also take a bus, which is cheaper. So your car in this case becomes a liability because you have to pay for the insurance, repairs, and it depreciates over time. So really buying a car is not an investment unless you use it to make money. Now, buying a house, is it really an investment or is it really a liability? It really depends. So the house we just purchased, ta-da, this beautiful house. It's definitely my dream house because I designed it's basically semi-custom home. I basically designed the kitchens, the patterns and everything. It's just the way the house is, it's so pretty. But is it really an investment? So let's look at what comes to buying a home and what's the potential return of this house. So first of all, buying a house, there is such thing as closing costs, which is usually 4% of your house. So a lot of times when people buying a house, they're like, okay, this house is priced as $200,000. So I'll just have to have $200,000. Of course, we don't have $200,000 in the bank, so we'll have to get a loan. So people usually have this idea of, I just need to get a loan for $200,000, but it's way more complicated than that. So first of all, when you're purchasing a home, you have to get yourself qualified. There's like insurance and this and that, mortgage, and there is such thing as closing cost, and make sure that you have that closing cost money, like several $1,000s, which could be equivalent of someone's monthly income that just go into the closing cost. The next one is the interest rate. So even though maybe your house is priced as $200,000, there is such thing as interest. And even if you land a really happy interest rate like 2.85%, it's still a lot. And over the time, so eventually you ended up paying 50% extra for the house. So if you have a $200,000, you may end up paying $300,000 after you pay up the house, depending on your interest. But let's say we got a sweet interest deal, but it could also be pretty high. So even though you're like, oh, I bought this $200,000 home, it's definitely a steal. But eventually over the years, you pay way more than the actual house that it's valued. So even though you felt like the house is affordable, but over time you're actually paying way extra. The next one is down payment. I think a lot of the banks are really pushing people buying houses because when you buy a house, you need a loan. When you get a loan, they get the interest. But is it really worth it? I don't. Depends on how much you pay down for the down payment. We paid 20% down because we don't want to pay for the PMI. Wait a minute, what is PMI? Nobody told me about this. Really, I didn't know about this until we started purchasing a home. You have the choice to pay 3% down, 5% down, 8% down, 10% down, 15% down. But if you don't pay enough down payment, it is a red flag for the bank who are loaning you the money. That just gives the risk for the bank. Maybe this borrower doesn't have enough money to pay for the down payment. That means that this borrower doesn't necessarily always can make the payment for the mortgage. Of course, the banks, they're not done. So they give you an alternative deal, which is that when you pay for the mortgage insurance in the future, just in case you lose your employment and you're not able to pay down the house, the bank can actually get it insured for its value for the loan so that they're not actually losing money on lending money to you. But who's gonna pay for the PMI? Who's gonna pay for this mortgage insurance? It's not a bank, it's you. So if you just pay 3% down, I'm pretty sure you'll have to pay for the PMI, which is a lot of money itself. It really depends on you, your situation. To me, it's just not worth it for me to pay for somebody else's insurance. So to me, I felt like if I'm not able to afford 20% down payment, it's probably not a good deal for me to purchase a home. But of course, your situation could be different. It's your house, your decision. We have closing costs, we have the down payment, we have the interest rate, we sometimes have to pay for PMI. And now we move into this new home. We're so excited. We're buying furniture and everything. But wait a minute. We've been moving here for a month and we got bills. What are those bills? Okay, first of all, property tax. It really depends on the state. Some states, they have very low property tax versus in Texas. Although the housing market here super affordable. The houses here are so cheap that you can just pay for 20% down payments if you have enough savings. However, there is a very high property tax here in Texas, which is really, really sad. It makes the house affordable at the front, but over the time you have to pay for property tax. So I'm gonna use an example of one of my friend's house. So my friend's house is valued as $150,000, which is pretty affordable home, right? But they had to pay $500 each month for the property tax because the house is owned by the parent, and that is not the primary residence of the dad. So the dad owned the house but gave the house to live to the son. So the son is paying for the property tax, which even though you're living in a house for free, you're paying for the property tax, which is a little bit cheaper comparing to the rent. But I also saw that if you're renting a house, you can actually only pay $800 for renting an equivalent size home. So you are basically saving $300. So maybe renting sometimes is a great idea. The property tax is definitely something really, really important to remember. When I was purchasing a home, I was like, oh my gosh, the houses here are so much cheaper than my hometown Beijing because, you know, I just buy it and it's like so much more affordable. But I have to pay for property tax. So let's say if I live in this house for 30 years, I have to pay so much property tax over the years. And that's almost like more money than the house itself. So after property tax, you also have to do repair. We had our first floor damage recently, but of course the house is under warranty. But just think about it. As you live in this house over time, there's always gonna be things that are damaged. Like in Texas, we have hail damage, you have to do the roof, and of course we can, get insurance and things like that. But still, there's some money that you have to pay out of your pocket. And of course, you need a property insurance just in case there's a hail damage, which is really, really high in Texas. You know why? Because of the hail damage and hurricane. So There is property tax, there's property insurance, there's also such thing as house repair, because the house we used to live, now we're trying to rent it out, but we have to spend a lot of money like remodeling it, repair it, like the drainage of the this way, that way. It's just so much a hassle. But if you're a rent, all you need to do is to call the landlord and they were gonna come, they're gonna fix the house, and you don't have to pay for anything additional. And the next expense will be homeowner association. I know not every neighborhood has a homeowner association, so it's not like necessary. Like my friend's house, they don't have a homeowner association. But let me give you an example of living in a neighborhood that doesn't have an HOA. Again, HOA could be a pain in the butt sometimes. However, sometimes they do protect you as being a homeowner in the neighborhood. So example of my friend's property again is that they don't have a homeowner association, but one of the neighbors actually used a shovel or whatever to dig a hole in the regular road and use the hole to create like a blockage. So when it rains, the water doesn't go into their house. So they are proving their house from the flood damage just in case there's a hurricane. However, because they're getting the dirt from the road, all of the other neighbors, when they pass the road, there's a huge water puddle. So if there is really hurricane, the houses beyond that point, they're gonna be flooded and they're not gonna be able to get out. If you live in a house with a homeowner association, they're never going to allow something like that to happen. And also sometimes if there's water puddles, they will just use the homeowner association fee to fix it. Of course, sometimes they have like different regulations for your houses, like your house has to look like certain color because that's the color of the neighborhood or something like that. But still, I think a lot of it does protect the interests of a homeowner in that neighborhood. So homeowner association fee is not a lot per month, but it actually adds up. It also depends on the actual neighborhood. So if you live in a more higher rise neighborhood, of course you pay higher homeowner association fee. So eventually owning a house, even after you pay down the house, you still have to pay for the property tax, property insurance, homeowner associations, and things like that, and repairs and things like that. So it's definitely a lot of money to own a house, especially in Texas with high property tax. So after I shared my experience being the first-time homeowner, you probably know owning a house comes with a cost. The closing cost, the interest rate, the down payment, the private mortgage insurance, the property tax, the monthly payment mortgage, the repair, the homeowner association, the insurance, all these are costs. All these are liability, but is owning a home really an investment? How about the return over time? We live in San Antonio, Texas, and there are more and more people moving to Texas from California because we don't have income tax and we have big land. Even though you have to pay for property tax, you can buy a bigger house and you can enjoy the bigger house with very little payment for front, and you just have to pay for the property tax. So there are a lot of people moving to Texas from California. So I think this is just my prediction. I think the housing market in Texas in general, especially in bigger cities such as Austin, San Antonio, Dallas, Houston area, I felt like the house market is gonna go up. So if you buy a $200,000 home 20 years ago, it's probably gonna worth more than $300,000. So you gained $100,000, which is a very, very high gain. However, remember we're talking about the interest rate, right? So if you're buying a $200,000 house, in about 30 years when you paid it up, you probably pay $300,000. So the gain on your property, it's probably pretty similar to the interest that you pay. So even though the value of your house increase, you may actually have to pay for it over time because it depends on your interest rate, of course. Some people will have 2.85% interest rate, which is really nice, but some people, they may have 5% interest rate, right? So if you have 5% interest rate over time, it's actually crazy. Though when you resell the house in 30 years, it's probably gonna be way more than you first bought it. It's valued for more, but you're actually paying it because you pay for the interest. Ta-da! Didn't we just prove that owning a house is purely a liability and not an investment? Not so, because there are different ways of making this house your investment. The first thing is, I know a lot of people doing house hacking, is that you can buy a house and rent some of the rooms out and collect rent. Once the house generates your income, it becomes your investment. If you buy an investment property, you rent it out, of course you have to pay for the property tax, you have to pay for a lot of things, but afterwards you may still make maybe $200, $300 per month, and those will be your capital gain, right? So you actually gain money by owning that investment. So one of the ways to do it, if you have enough money, is to buy a house very close to the college or graduate school you go, and you rent 1 or 2 rooms to some college or graduate students, live there harmoniously with them, you have roommates, have friends, and you can make money and use the money to pay for your mortgage. So essentially, you just pay for the down payment and you lived in that house for free for several years until you felt like, okay, I paid up the mortgage, I would just live there and pay for the property tax and insurance and other fees. So that's one way to do it, and I personally actually know someone else to do it. Of course, they come from middle-class family, they have parents who are able to pay for the down payment, and of course it's also a hassle that you have to contact people, advertise for your house, and you have to manage the property, you have to, it's an experience, but I've known my friends to do it and they did it very successful. The second one will be paying 20% down. So if you're paying 20% down in your down payment, you actually don't have to pay for the PMI, which saves you a lot of money every single month, not paying the insurance for the bank. That would also be a great way to reduce the payment that you pay. I know you're probably gonna go some rice and beans and rice before you pay for the down payment. That's what we did. During this quarantine, we literally saved most of our money just for the down payment, so we don't have to pay for the PMI. So that would be one great way to reduce the cost of the house. Third thing to think about is that actually I just recently knew about this because of buying this home. So at first I thought when you're paying the mortgage, you're just paying a part of the house and a part of the interest. But that's not how it works. I would never know about this until I purchased a home. You're actually paying a high percentage of interest for the first maybe 10 years of your mortgage, and after you paid up the interest, you start to pay up the actual housing cost. So you're actually paying the interest before you're paying the house. Ta-da! So make sure you work with a CPA on this. We actually have an accountant, and I think it's one of the best investment that we made is to hire an accountant, look at our income together and look at our cost and liabilities to calculate the tax returns, because it's so important to know what are the tax policies and what are the ways that you can actually reduce the tax you have to pay from your income tax. Again, you have to work with a CPA on this. I'm not professional, but knowing that, it's important during the next tax returns, make sure you work with a professional to evaluate your home, evaluate the mortgage, to see what goes into your mortgage every single month, how much you pay for the interest, how much you pay for the actual housing payment, and how much you can deduct from your income tax. That is so important. So definitely get a CPA involved and make sure you file your tax properly. Take advantage of these tax codes because they're there to protect you. So the next one is to make smart decisions. So when we were looking for houses, I saw some really beautiful houses. They're so big, and I felt like, wow, this is so pretty. However, remember, every house comes with a cost. Do not buy a house where you have to pay 25% of the income to the mortgage. I mean 25% of the net income. So after you get your income, you have to pay for the federal tax. Thank God we don't have state income tax, which is really nice, but our state income tax really goes to the property tax. After the tax withholdings, calculate how much money you can actually afford for the mortgage. So an example is that if you make $3,000 per month after tax, you shouldn't be paying $1,000 to the mortgage, because that'll be 30%. That's too much. So remember, after the mortgage, you may still have repairs to do. You may still have to pay for the furniture. You still have to live. You may have children. You may have to buy stuff. You may have to buy cars and stuff like that. You may have to save money and invest for your retirement and things like that. So definitely 25% is the golden rule that I saw everywhere from Dave Ramsey, from a lot of real estate agents, from a lot of people who are millionaires. They said never pay over 25% of your net income monthly to the mortgage because you have other expenses, you have other emergencies. So definitely be mindful of that. So if you can't afford $300,000 house, just buy a house for $150,000. Remember, you're always gonna think this house is your forever house. My husband bought a house like long time ago with family and things like that. But after I moved in, I was like, I don't like the floor. I really don't like the lighting fixture. So you're always gonna think this is gonna be your forever home. It's never gonna be your forever home, especially if you haven't got married and your significant other is gonna be like, I don't know about that. So just buy a smaller house first, and maybe in about 10 years, 20 years, you can upgrade from that. But always live below the means is what I learned from my poor mom. So, but hey, we're no longer poor. I grew up really poor. My mom was very poor, but now we're no longer poor. We're finally middle class. That's only because we lived below the means, and that makes us being able to afford buying an apartment eventually and being able to have savings and changing our lives and things like that. So always remember to live below the means. Before going to the market looking for houses, make sure you first look at the income and budget and things like that, and try to think about a range for like what is the house that you can afford at this moment. It doesn't mean that this is your forever home. The last one is also about making decisions and budgeting. Honestly, I've never been in debt. I am so privileged that I got scholarship and fellowship during my doctoral studies. I'm so privileged. I got scholarship during my undergrad studies. Also very privileged that my mom and I were living below the means, and my mom saved enough money to help me out during the master level studies. So the only tuition I paid was during the masters, and I had help from my mom. So I was so privileged that I never had student loans. And when I first purchased a car, I bought the cheapest model, and I paid it off within a year. So I paid up my car loan within a year. I'm a firm believer of not being in debt. If you don't believe me on this, go listen to Dave Ramsey. It's never a good idea to be in debt, any type of debt. It doesn't matter what type of debt. It's never good to be in debt. But if you're wanting to buy a house, of course, nobody can afford a house like this, like paying cash, right? So I am a firm believer only have one loan on my back. I don't think it's a great idea to have a student loan, a car loan, and a house loan, and the credit card debt. It's definitely not the best idea. So if you have student loan, I would think maybe paid up your student loan first. If you have a car loan, maybe paid up your car loan first. Just rent for now. It's just, you don't have to own a house. A house, remember we did a calculation, it's a liability. It's definitely good to live in your own house, don't get me wrong, but you don't have to rush to be a homeowner and have 3 types of debt on your back. Because I don't have any student loans, I don't have any car loan, we were able to afford this house, of course. So before you start buying a house, make sure you calculate what type of loans there are. If you're in the very last $10,000 of student loans, just pay it up. Just pay it up. Like, pay it up. Because you don't want it to be on your back. Because what if pandemic hits, right? So a lot of people, they were like, okay, I have student loans, but it's only $20,000 less. There's this perfect house. I want to buy this house. And then pandemic hit and this person lost the employment. How are you able to afford a house and the student loan and your car loan, right? But you need a car to go to work. You need to pay up your student loan, and the car payment is the bills are just sending you. And then the house loan bill is just sending you every week, like homeowner association, property tax, and this and that. So definitely, I don't think it's a great idea to rush into buying a house. I am 30 years old and I bought my house in the first 30 years old. And remember, it's two income, both me and my husband together. So if for some reason one of us lost our income, we still have the other person to rely on in the short term. My philosophy is always to live below the means, always have enough emergency funds to cover 3 months of expenses. And if you have that in place, I would start to consider buying a house, being an owner of a house. All right, so going back to buying a house, is it a liability or investment? I want to say if you're buying your rental property, it's definitely an investment, because if you rent it out, the actual rent is going to pay the mortgage, and slowly, you're just paying the down payment. And in the future, in about 20 years, if you sell it for a higher price, eventually you just pay for the down payment, you pay for some repairs, and you make just, which is a great investment. If you're buying a house to live in, like our house right now, it's definitely more of a liability than an investment, because we definitely don't make any money out of this house. In about 30 years, 40 years, let's say we're really, really old and we want to sell this house. Of course, this house is going to worth a little bit more than now, but remember, we have an interest rate, so we're actually paying 50% more. So in the future, let's say if there's a 50% gain in the value of the house, we still paid for the gain, because over time we paid way more than the house is valued right now. So definitely I felt like it's just a liability at this moment, but it's a great feeling. You own your home. You don't have to worry about your landlord raising the rent. You don't have to worry about. So definitely, to me, it's more of an emotional gain, not so much of a monetary gain. Alrighty, that's it. I hope this video can be helpful to you. If you're a millennial like me who is thinking about purchasing a home, maybe my experience can help you and give you an idea of what purchasing a home is like and what it's like owning a home. It's definitely not as glorious as it may seem, because I have to work so hard to pay up the house. Before you go, don't forget to subscribe to this channel and ring the notification bell, and give this video a thumbs up. Your support really means the world to me, because again, I'm relying on the AdSense to maybe help me out to pay a little bit faster in our house loan. So your support really, really means the world to me. Alrighty, that's it for today. Thumbs up, subscribe, ring the bell, and I will see you in my next video. Bye!